because they asked me for advice, and they're giving advice to people, and they haven't been through different cycles. They haven't been through enough loans that they've taken. They haven't been through enough lease renewals and negotiations, or doing build-to-suits and building buildings. Technology has changed general office space. You don't have to be in an office all day long. Now, even existing income streams. So if property has vacancy, that's okay. We usually buy properties as well that are 100% lease. We do short-term or long-term leases. So the returns depend on the strength of the credit of your tenants, what's going on in the capital market, so to speak.
What's up, everybody? This is Simon on the Ideal Hour. On this episode, I have Ben Reinberg. He is a well-acclaimed real estate investor, particularly in the commercial space. He also has a podcast called I Own It. We're going to talk a lot about real estate, how it equates to building wealth on this episode. So if you want to build wealth, we're going to hear from Ben why real estate is the most important thing. We'll also figure out how he got started in real estate, what advice he has for people like yourselves that are listening. Ben, thanks for joining.
Thanks, Simon. I appreciate you having me on. It's good to see you. And what is today? Thursday? Is that what it is?
It is Thursday. It is. Usually I say, what day is it when I'm on vacation? Are you on vacation by any chance?
No, I'm not on vacation. It's just we're always so busy, and I work long hours and travel a lot, that for me, every day they kind of flow into each other. So I was wondering what day it was. Thursday.
I have that all the time. I'm telling you, it's so wild when, especially on vacations for me. I guess I'm not working hard enough if I don't know what day it is during the work week. All right. So you're CEO of Alliance Consolidated Group of Companies, CGC, mentor, educator, philanthropist. I've checked out your Instagram, which we'll link below as well, The Real Ben Reinberg. And you're fit, great marketing on social media. Let's get into it. How'd you get started with real estate? What is your secret sauce in real estate? Or what do you tell your audience when you're presenting or speaking or mentoring?
Well, I appreciate the question. For me, it was a different journey. I didn't get on social media, Simon, until about 2 years ago. So for me, I took a different approach, and I built up my business and my empire for 3 decades. I've been in commercial real estate for 3 decades, and we own commercial real estate throughout the United States. And I am an office, industrial, and retail expert. And now we're becoming multifamily experts as well, because we just launched a new division. And so we have different companies, different asset classes. And I started this business when I was in my early 20s. And how it came about was, I'm a little bit older than you, Simon, and there wasn't the internet when I was a kid. Yeah. There wasn't the internet when I started in business. Microsoft was coming out with Excel and Word, and the computer was being a little bit different than using DOS than when I was in college. And so for me, I've had to go on a learning curve. I had a learning curve how to use technology. And part of that was commercial real estate. Our business has seen tremendous strides in technology. And so when I was younger, it was a lot of going out there and canvassing properties, making phone calls, asking questions, coffee meetings, meeting with people, asking questions. And those skill sets have taken with me today, helped me dominate a space because I could pick up the phone and have a conversation. I can have a great call with someone where I can influence them to just not only transact business, but the ability to build resources through those people. And some of those people turn into investors as well. So for me, I was very blessed because I learned the business, I feel, the right way. I had to learn the real estate fundamentals. I had to understand construction. I had to understand what market rents are, vacancy rates, absorption rates, all the real estate fundamentals you need to understand in order to be a great fiduciary for capital, be a good investor in commercial real estate. Commercial real estate is a lot different than residential. And so for your audience that doesn't understand the differences, when you have a multifamily unit that's 5 or above, that's commercial real estate. But what I do is industrial properties, distribution, manufacturing, you see around the United States. Maybe Amazon, who everyone knows Amazon, has a huge distribution facility. It's those type of facilities we own.
Mhm.
Retail could be shopping centers, strip centers, single tenant net lease retail, restaurants, et cetera, is in our portfolio. It could be office buildings. We don't have as much general office we used to, off a tremendous amount, but we're one of the leaders in Simon in medical office. That's something we preach.
Those are great, by the way, and they're consistent.
That's right. And we have the Alliance Medical Fund that we're raising equity for that's done very well. And I say this frequently, the human body, Simon, is never going out of style. I've been in business for 3 decades. We decided about, I don't know, 5 or 6 months ago to get into the multifamily space. So we opened up a new division. We create a whole department, and now we're starting to acquire multifamily assets, large multifamily assets. And so for us, and now we're doing hard money lending. So we have different platforms out there, and we have a lot of people around the country that work at Alliance that do a phenomenal job. I have an incredible leadership team. And for everyone out there listening, like, I didn't snap my fingers and all this happened overnight. I've been doing this a long time. I understand how to bring in talented people. I understand how to delegate, all the things you need to do as an entrepreneur to be successful. You got to learn how to delegate. You got to learn how to trust your decisions. And by doing all this, Simon, what ends up happening is you build great loyalty and a great team around you and resources that will help you scale and elevate to the point you want in your career. And so that's what I've been able to do. And I love what I do. And so now I've been mentoring kids in our industry probably for the last, I would say, 20 out of the 30 years I've been in this business. I get a lot of people that call me. I get people that ask me, you know, one of the guys on your show, Dave Meltzer, he had some young guy here in Newport Beach call me and said, could you help me? Now, I'm not a multifamily expert, so to speak. I understand the business. We opened a new department, but he wants to get into multifamily. And so I sat with him. He was smart, brought me a bottle of wine to break the ice.
Was it a good bottle?
Yeah, it was a good bottle. And we had lunch. Okay. And long story short, he's looking to buy multifamily and start his own company. And so I've been in those shoes. I've been in those shoes as a young man where you need someone to lean into and guide into. And so I do a lot of that. And so a lot of people ask me questions, I help and stuff. And so we talked about, we said, if Ben has enough time, then maybe he should start teaching and create a program for that. So we're looking at if it makes sense. I've been doing it my whole career and helping people. And so for me, it's an easy transition as I walk out of this company eventually. And then
thanks for sharing that, Ben. I wanted to touch base on what you said earlier before we continue. To your point, I think the skill sets that you have are so valuable for starting without the internet, without the glam, the real hard work that it would take to convince someone in person, on the phone, et cetera. I think those skill sets today are so lost. And to your point, you started your social media only the last 2 years, you mentioned. I feel like nowadays people are starting social media and acting as if they're this big shot without even sometimes owning property or even knowing what they're talking about, and misleading people with the types of investments they should make. For example, just last night, I saw a YouTuber that I've seen, Meet Kevin, said the best thing to do is invest in new build real estate. You just put $5,000 down, $10,000 down, and then 2 years later you could tell him screw it, and then maybe you'll lose 5 or 10,000. But what he doesn't mention is the down payments that they hold without any refunds if you choose to back out of a build that you agreed a contract with. So it's very interesting, and I'm glad you're experience first and then social media second. I don't see that often nowadays.
I don't see how people do. I see a lot of people on social media, a lot of people that follow me, and I see a lot of men and women that post about commercial real estate. And I know them because they ask me for advice, and they're giving advice to people, and they haven't been through different cycles. They haven't been through enough loans that they've taken. They haven't been through enough lease renewals and negotiations, or doing build-to-suits and building buildings. And a lot of them are brokers or whatever. And so I understand they're trying to build their following and their expertise, and they basically parrot other people's conversations. I
Hmm.
see a lot of that. I'm different. I'm going to share with you my experiences. I'm not going to parrot someone's phrase. I'm going to tell you exactly how I see it and how I've been through that experience. Uh, I've seen different cycles. I've
Hmm.
seen what's coming and what we're going to see in 2025.
Hmm.
I've seen different presidential elections and how that impacts the economy and our business. Interest rates rising, interest rates falling, all these things, Simon, I've been through. And
COVID commercial spaces with offices. That was probably one reason I would say. You mentioned that you offloaded some office space. Would that?
office has changed, Simon. I mean, one thing that's changed in my business career, in my life, I've seen is that the internet and technology has changed general office space. You don't have to be in an office all day long. Now, I was having this conversation with I would love back in Chicago, where I'm from, our headquarters. We had an office with everyone in there. It was great. It was great. We'd have lunch together. Some people would. They'd go out together. There was real camaraderie.
Hmm.
The whole space of office and running a business, a company, whether you're public or private, it's changed drastically. And why it's changed, Simon, is because people are working remotely. Tenants don't need the same amount of square footage. So there's a lot of vacancy, especially in the suburbs. And then all of a sudden, a couple of years ago, everyone remembers the pandemic. And then people got comfortable working from home.
Hmm.
And that changed as well. And so general office is a very interesting product in our space. I was in downtown Chicago eating dinner with a friend, and he was pointing at three buildings, skyscrapers, and he said that one has 40%, that one has 50, and that one even has 60. That's what we're dealing with. We were having dinner talking about this. So that's what general offices face. For us, we like medical office because, like I said, the human body is never going out of style. Medical office have a high retention rate of lease renewal rate. They also invest a tremendous amount of money. Looks like someone wants to call in and talk to us. What ends up happening is with the medical office tenants spending so much money and they build deep roots in those communities, they establish a lot of value for that commercial real estate property. And what's interesting, most people don't realize is those buildings, that real estate, the land and the property, the improvements that these tenants occupy in the medical office space, is their business is reliant on it. They're relying on the power. They're relying on the equipment in it and how it functions, how it lays out, how much parking do you have. So all these factors, Simon, go in these decisions when we look at assets, and it's why they stay a long time. So it's a safe, secure, and stable, profitable investment medical office. And then we got into veterinarian office about 10 years ago, and tremendous as well. So that's what we do. And we're commercial real estate experts at my company, Alliance. And we're here to make high net worth individuals, which people use the word accredited investors and family offices and people from all over the world, we make them a tremendous amount of money. That is our job, is to shelter your money and make you a tremendous amount of money. And that's why investors come into our space frequently.
What's the rate of, let's stick to medical offices because I find that intriguing. And also we have a company in the medical field as well, in hospice and home health. So let me ask a question just for myself and maybe for the audience. I do think, personally, I think if anyone's going into any type of business nowadays and the subsidiaries of those businesses, medical seems to be a very reliable business in terms of consistency, growth. In your medical offices, I would imagine the people that are there, not only are they building their clientele around that office so that if they move, they have to move within a few blocks kind of thing or close by, but also they buy a lot of equipment, I would imagine, to house those. So it doesn't make sense for them to move buildings. With medical offices, as an investor, what's the rate of return? Are you looking to sell these? Are you raising their rent every year? How does one profit and continue to invest?
Well, we'll buy value add to even existing income streams. So if property has vacancy, that's okay. We usually buy properties as well that are 100% lease. We
Mm,
do short-term or long-term leases. So the returns depend on the strength of the credit of your tenants, what's going on in the capital market, so to speak. So, for example, last few years, interest rates were low.
mhm.
And because medical is a stable asset, returns could look anywhere from 5 to 7% on a consistent cash flow basis. Now that's rising. In our new fund, the Alliance Medical Fund, we play between 6 and 8%, depending on what class investor. And the class is established by how much you invest in the fund.
Mhm.
And but our track record is 24% IRR on medical property. And with this fund, we're probably going to project probably high teens on IRR basis. So people will 2 to 2.5 times their money when we sell the fund in 5 years.
Okay.
But generally speaking, medical is a conservative asset.
Mhm.
It's safe and secure, so to speak. It's pandemic and recession resilient real estate. People will pay a premium for that product. And the reason why we started this fund is because a lot of investors have been asking us for diversification, asking for scalability. They've been asking for purchasing power, and they've been asking for better cost of capital. We're excited about it. And what's interesting about commercial real estate is everyone knows there's over $30 trillion of commercial real estate loans coming due in 2025. If you're in real estate or you're in any industry, whatever business, and it's chaos out there.
Mhm.
We don't know where this country's going. We don't know where interest rates are going. However, these are the times you want to double down. These are the times you want to run what I say into the fire. This is a time to step up your game, put in the extra work, learn, continue to grow, and use this chaos because there's a lot of opportunities. There's going to be a tremendous amount of opportunities forthcoming in the next 12 months.
Now, Ben, would you say you want to be cash heavy or liquid heavy in this
Yeah,
time?
I always say if you could have as much equity as possible,
Mhm.
you're going to have a lot of buying opportunities. Whether you buy companies, whether you buy real estate that can be residential or commercial, like what we do,
Mhm.
there's going to be a lot of opportunities because I believe, depending on which way this election goes,
Mhm.
we're either going to start thriving again or we're going to go into a deep recession.
I agree.
So the economy is really dependent on being energy independent in this economy.
Not to get too much into politics, but I always wonder why people don't consider how important the economy is and how important interest rates are to their well-being of their family, to put food
Yep.
on the table, et cetera. Like, who cares about the political side of other things?
Right.
It's if you can't feed your family, or if you're in a deep dive, it's chaos all over the place. And I think if the viewers are listening, always choose the candidate that's going to thrive in the economy. It doesn't matter. You may not agree with them aligned on every single topic, but what's good for you is, at the end of the day, is a successful economy so that you could thrive. So I do hope the interest rates do go back down as well. I think once that happens, it just opens up so much opportunity. Ben, one more question about medical buildings and offices. In terms of medical buildings, which are your favorite types? Are you talking about, say, dental surgeons? Is it hospice facilities? What are the categories of the medical building industry? You mentioned veterinarians, et cetera. What are the premium ones that you would consider for the audience?
It's a great question. We buy anything that you and your family would go see. So, for example, we own dental, surgery, and cosmetic surgeons. We own, in the medical office space, we own plastic surgery, dialysis, orthopedic, oncology, gastroenterology, neurology, anything that you and your family would use. And so we look for significant investment by the tenants. We look in certain MSAs in cities around the United States to invest in. We look in pro-growth areas. We look in areas where they're pro-business. We look where population is migrating
Hmm.
to those certain areas as
Like a
well.
Florida, for example. Are you investing in
Florida is a
Florida?
great market. Yeah. So Florida is a really big market for us. We own a tremendous amount of properties in Florida. We love Florida.
Hmm.
I've been doing business in Florida for decades.
Hmm.
We do business in Texas. We do business in Tennessee and all throughout the South, Southeast, Southwest, and Mountain West states. We do a lot. And then obviously being in Chicago,
Hmm.
we do some in the Midwest. We got out of the Midwest because we're seeing people flee to
Hmm.
the South.
Hmm.
And so we're very smart about how we look at investments and how we look at trends and where the medical office is going to create success. And a lot of that is in the South and Southeast and Southwest and Mountain West states.
Why would a company want to sell a medical office if it's, say, 100% occupied? Like, what would be the reason? I know there's family dynamics and
Mhm.
divorces and all this
Sure.
and stuff, but
There's a lot of reasons. I
yeah.
mean, sometimes loans are coming due, Simon.
Mhm.
Sometimes partnership issues, death, divorce. It could be um, interest rates are high
Mhm.
and they can't refinance it.
Mhm.
There's so many different reasons why someone sells. And sometimes doctors own facilities that we buy from them. What ends up happening is there's conflicts of interest.
Mhm.
So if they're still working and they're occupied, let's say a hospital system
Mhm.
buys their property, there's going to be an inherent conflict of interest. I'll give you an example. So
Mhm.
let's say you and I were partners, we own a property, and you can pick whatever city you want, and we sell our practice to a hospital system. Okay.
Okay.
And and you and I are still working there. We've been partners forever, we're still
Mhm.
working there. And the hospital system comes to us and says, you know what, Simon, it's time to replace the roof. And you might say, no, you know what? There's still about 5 years of life out of this thing.
Mhm.
That's a conflict of interest. These little inherent conflicts of interest of how to take care of the properties. Maybe you got to mitigate property taxes. And us as doctors, we're going to say, well, like, we don't want to spend the money,
Mhm.
right? And so what ends up happening is they end up selling to us. Or it could be one of the partners wants to retire, they own the real estate,
Mhm.
not a problem. They sell it. Another reason too is people want to generate capital instead of going to the bank and getting a loan. So we do a lot of sale leasebacks. They'll sell us the property and lease it back on long term, and they'll use that capital for expansion,
Mhm.
paying off debt. Their needs are within their business, and so there's a lot of reasons to answer your question.
Give me and I'm generally, again, curious, and I think that our viewers would be as well. I would imagine our viewers are kind of starting out that 5+ unit, and we're going to get
Mhm.
into residential in a bit. But if you're looking for a medical building, let's say your first one, and you go, hey, I have some cash flow capital, what size medical building would you recommend? Is it with 12 doors there? Would you occupy a single tenant type medical building, which maybe I would fear a little dangerous, and if they leave, but in medical, I would imagine they wouldn't leave. You know what I mean? What's a first look or a first consideration if you're an early
Well,
stage investor?
yeah, if you're in the early stage of business, and I teach this, and this is really important, I would look at my personal opinion. You can do what you want out there. My personal opinion is I would look in your local area. Okay. So pick whatever region you're in or somewhere you could drive to. Keep your costs down. Don't be flying everywhere. So
Mm,
if you could find something in your area, and then because you're going to have to raise capital for that acquisition, it's a lot easier to talk to people local in your area where they might be able to go and drive by the property and see it. It's more transparency when people are close. So I recommend is starting in your area, find an asset, uh, go talk to different banks in the area and learn and figure out how do you together the capital stack. I would start early and say, how do I go and get a loan? Do I
mm,
need to bring in someone to help me get the loan? And then I would look at and create a plan of what type of property. It doesn't mean medical office. Let's say it's a 5 unit building.
mhm,
I'm going to have a plan and say, okay, well, I want to, I live in Tulsa, Oklahoma, as an example. I don't, but let's say you
mhm,
do as a
mhm,
viewer or a guest. And, you say, okay, well, I want to buy a 5 unit or a 10 unit property. And you know what? I'm going to live in one of the properties and it's going to be owner occupied, which I might get a better loan. So go talk to banks, go talk to mortgage brokers, find out what are your capabilities and how to deal with it. And then once you know how you're going to finance it, then you can go and create a plan. Now you're going to say, okay, well, I'm going to use shoe leather. I'm going to go canvas around the area and find the 10 unit buildings, the 20 units, the 5 that I can find that make sense in the areas I want to be. And then what you do is you find those owners, you can contact them. And you have to put the time in. You're going to have to really grind and put the time in. And then once you get to a point, and you can also align yourself, Simon, with the broker as well, they can help you. But you want to make sure that you understand how are you going to put together your capital stack.
So you can see where the
Yeah,
threshold that you can potentially invest in as
Yeah,
well.
so you want to know what your capabilities are. So if you're saying, hey, I can buy a 10 unit building, because what adds strength is if you can get a letter from a bank that says, you know, Simon Katz has the capability to buy this amount, blah, blah, blah. Because you're new in the business, you're going to have to create certainty for your seller. For example, when we go out in the marketplace, people know Alliance closes. That's our track record. We've been around for 3 decades. We have 200 plus years of leadership team experience. And no one's questioning us about capital. More about tell me what's happening with this property, and we're going to go through due diligence and et cetera. So when you're starting out, if you're Ben Reinberg at 20 years old, you're going to want to make sure that you can put the capital stack together and you can show it to people to provide comfort and certainty.
Love that. Thank you for sharing that, Ben, and appreciate all the wisdom. It's an eye-opening podcast, not only for me, but I think a lot of our viewers that are constantly talking about real estate. And as you know, I've had some good real estate guests, top agents, et cetera. What were some of your biggest challenges in building Alliance? I mean, this is not a small operation you started in your 20s, 3 decades, et cetera. What were some of the biggest challenges? How did you overcome them? And how did you keep going?
For me, there was a couple things. One is understanding different cycles, understanding how the real estate fundamentals have to be underwritten properly, understanding that you have to create abundance of resources, of investors, of deals within your company to survive. And then also on a personal level, understanding how to deal with the human mind and your emotions and how to also communicate. Communication's huge. Like people ask me that are getting started or in their 20s or 30s, you know, Ben, if I could work on anything to advance in my career, and I say, work on your communication. Because communication, Simon, equals wealth. I'll repeat that one more time. Communication equals wealth. The better you communicate, the wealthier you'll be. And that's just the way life works. And so how I see this is, you know, your listeners out there, I want them to really take this to heart, is don't accept sheep rules. Be a lion. Don't live someone else's life. Live the life you want to design. So if you want to get started in commercial real estate, I always tell people the best way is to start investing with Alliance, because you will go on a learning curve to learn about the business. And then you can decide, you know what, I want to do this myself, or I'm in a different industry. I'd rather invest passively, which a lot of investors like, because I got to tell you, owning commercial real estate is not for the faint of heart. It's a time-consuming business. You have to be all in it. You got to be in the deep water every single day. It doesn't stop. You have a lot of challenges and issues. You got tenants, you got construction, you got maintenance and repairs, and improvements. You have lenders to deal with. You got different environments, rising interest rates, falling interest rates. And so there's a lot of lessons you have to learn. And so I always say, well, just invest with Alliance, go on the learning curve, and then make a decision. You might decide, you know what, I don't like this business. It's great to invest in, but it's a lot of work and it takes my time. And so there's there's different things you could do to get started.
What's a typical investment with Alliance? What does your typical client look like? Are they coming in $10,000, 100,000, 10 million?
Yeah. So our typical clients are accredited investors. We don't do unaccredited
I
investors
see.
for a lot of reasons. And our typical minimums are 100,000 in our investments. And our fund minimums 100,000. Syndications, usually it's 50 or 100,000 depending on the situation and the project. But at the end of the day, your typical investor is a credit investor. For anyone that doesn't know what that means, it's you have a gross income of 200,000 for the last 2 years. If you're joint, it's 300,000 on your return, and you need $1 million of net worth. You can Google it. It changes a little bit the rules,
Mhm.
but long story short, feel free to Google the what a credit investor, what that qualifies. And so we qualify our investors, we interview them, we make sure they're a good fit for us, Simon. They're a good
Mhm.
fit for them. We want to make sure that investors are going to be dependable, reliable, because we are going to service the heck out of our investors. We give them a 7-star experience, white glove experience, and so that's the difference in what we do. And so there's a lot of investments out there, but the reason why people invest in our investments is because of the experience, the
Mhm.
solutionary oriented team, and a long-term track record. But
And
for your
stability and security on that
yeah,
investment.
but for
It's important.
your listeners out there, they're like, well, how do I get started?
Mhm.
You got to build. You got to do your first deal, or you got to learn, and you got to go through a learning curve, just like I did. And so I'm in the prime of my career. I'm 54 years old, and it takes time. Commercial real estate does take time to learn and grow. I have a lot of people that you see on social media
Mhm.
and that have been successful in our business, and they call me for advice.
It's
Hey,
awesome.
I'm looking at this multifamily deal, or I'm thinking of getting into this. Could you give me advice? I mean, I'm different podcasts for commercial real estate guys too. And so for me, it's a constant learning and growth. You have to continue to grow and learn in any industry, and commercial real estate is no different. In fact, you have to double down on your learning, especially with what's going on with technology these days.
Yeah, I agree. And the ever changing dynamic of the markets as well as the politics behind it. Here in San Francisco in the Bay Area, I had Todd Napoli. He's also in commercial real estate. He was
Mhm.
on the Housewife of Miami show, et cetera, but he's doing a lot of Instagram on there with commercial. And we were talking about, the dynamic changing in office buildings, particularly in San Francisco, with a lot of even big tech offloading office space. Do you ever see office buildings maybe converting to residential to house more population? Is this something that's in the future, or do you think office is going to regain and come back from what we've lost during COVID?
You know, I feel that people will buy office because the prices will drop significantly and
Mm,
investors will think they could add value. Converting an office building to a residential is a really difficult challenge
mm,
because you have to redo the mechanicals, you got to redo fire and safety and compliance. It's
mm.
a very challenging investment. That's why people buy it ground up. What they would do is maybe tear it down, land value. But I believe investors will buy office. They're just going to be buying them at below replacement cost type numbers,
I see.
and it's a challenge. I mean, it's going to be a very interesting sector to watch is the
Hmm.
general office space. And there's a lot of vacancy out there. Rental rates have compressed, and it's in that market, it's tough. It's very challenging to pay investors a return on their money. And so the opportunities are going to be to buy notes or to buy distressed office buildings in the next few years if you believe, hey, you could turn it around. But it's going to depend on the area. It's going to depend on demographics. It's going to depend on uh, how you buy it and what the cost of the dirt is that you bought it for. And so your basis in those deals are going to be critical. And
Those
it's going to be a very interesting product to watch.
It is. I'm a little worried about it, and just from the standpoint of San Francisco being so vacant. I mean, empty office buildings. Even the Salesforce Tower, which got built and was so
Yep.
highlighted, it's kind of empty. I think it kills the businesses around it because there's not as many people going into the office, so it destroyed downtown SF. Um, you, I personally would say that office buildings would not be my main go-to for the audience watching. Medical is very good. I had another question with your experience, Ben. What about investing too much in one unit, like a single door perspective, where I've had a buddy that bought a building, for example, I'll give you a backstory. It was like 300,000 square feet. So, and he had a big tenant in there. I forget the company. Maybe it was Coca-Cola or Pepsi or one of those. And then the tenant left to consolidate, and then he was screwed. Basically, had to offload the property. What's your take on multi-doors versus single tenants and so forth?
Well, we own both, and it's really in the underwrite. Now, things change, environments change that you can't control, but you have to educate your investors. So, for example, in that, with your, was it a long-term lease? Was it a short-term lease? What was the strategy going in? Did you look at the credit of the tenant? Did you look at what was the rent per square foot in the market? What was the vacancy rate? When you underwrite the real estate fundamentals, I don't care if it's a single tenant asset or a multi-tenant asset. If you underwrite it properly, you can mitigate risk. That's what we do well at Alliance, because we invest millions of dollars a year into research and data when we go buy. I'll give you an example. We're buying in our fund a single tenant asset in Arlington, Texas. It's a 12-year sale leaseback. We're actually closing tomorrow as we speak.
Congrats.
And the word just went out. And so with that being said, we look at the credit worthiness. We look at the rent per square foot in the market. We look at the vacancy rate. We look at how close are we to the hospital. God forbid the tenant left. How would we backfill it? What are the improvements that need to be worked on? And so how you structure a deal, which is what we're experts at Alliance, is everything. The money is in the dirt. Don't fool yourself out there. It's how you buy a deal. The money is in the dirt. I'll repeat that. And what that means is what basis do you have going in? And so when a broker is selling you a deal, they say, well, this guy bought for this cap rate, or they start using different jargon out there. Understand the real estate fundamentals. Because when you own a property like we are as landlords, as fiduciaries, as principals, as we say, and not brokers, you are owning that property. You have to deal with all the challenges. You have to deal with investors and lenders, et cetera. So you need to be the leader. You need to be at the forefront and say, why is this a good investment? How are you going to protect your capital? And the capital goes a long way. It's your whole capital stack. It's your bank's financing or lender's financing. It's your investors. You have a fiduciary relationship to give this all effort. I call it 120%. And so how you deal with that is go ahead and buy a single tenant asset or a multi-tenant asset, but you still have to adhere to the real estate fundamentals. And you really have to dig in and do your due diligence and research. And I use that word a lot, due diligence, because it's extremely important. Now, for everyone out there, you're going to do your due diligence. You're going to go buy a deal. However, I want you to know that things can change. Interest rates can change. So you have to protect yourself. Do you get long-term financing if you're going to finance a deal? What kind of flexibility do you have in the loan? Are you working with a bank where you can have a better communication compared to a CMBS loan where you're not going to speak to the lender? So these are all the lessons, but also the education I've learned over 3 decades and why people invest with us, because it's a challenging business investing in real estate. People say, well, I'm going to do this fix and flip or wholesaling. I don't even know what all that is. I hear it
all the time.
I don't even want to get involved in that business, but I hear about it, right? You still have to do your due diligence. You still have to know, like, if I buy a residential home, right, and residential is based on the next guy, how many bedrooms, square feet, land, et cetera, taxes, blah, blah, blah. But with that being said, you have to do your homework to say, how do I protect my downside? You know what, Simon? One of the biggest misnomers that people do is they over leverage their investments, whether you're buying a company or you're buying a piece of real estate. One thing I learned is don't over leverage your investments, your properties. Put on conservative financing. The more equity you put in, the easier it is to solve problems. And I can give an example why that is, because when interest rates change, the value of the property might drop. And now your equity's kind of shrunk a little bit. Or you have to go get something refinanced. the more equity, it gives you a buffer to be able to solve challenges and problems in the environment, especially this environment, which is challenging enough. You have a
Yeah.
lack of liquidity and you got a lot of lenders that don't want to lend. You have a lot of equity. It's a lot easier to get a loan and solve a problem in this environment.
Let's talk about that if you don't mind a bit, and dive a little bit deeper into the equity of a property at Alliance, or maybe let's say we could talk about Alliance, but also as a single investor. Do you recommend leveraging a property to buy a second property if you have a stream of income coming in? Is that a good way to build up a portfolio in your mind, Ben?
Well, I feel you could build a portfolio with leverage. Like some deals we pay cash, some deals we have leverage on, or sometimes we'll pay cash and then put leverage on. I'm a big proponent of, I don't recommend using a high LTV on a property.
Mm-hmm.
I would say try to go 65% or less
Okay.
on deals. Okay. That's my opinion. So depending on the space you're playing in, I know multifamily, they could do a little bit higher, 70, 80%, depending on it. You know, try to have enough equity in to deal with the what ifs that come about. Because here's an important lesson. Everyone thinks real estate cash flow is like a send up in the air. Okay. But they're really like moguls. You know, you go through different cycles, like you lose a tenant, cash flow goes down, you build a tenant, maybe got more rent, it goes up. And so if you drew a straight line through all the hills, that's your average. You have to have the ability to hold. I say this a lot and I teach this a lot, especially to my team and people out on social media. The key to commercial real estate, especially any real estate, is the ability to hold, the ability to hold, the ability to hold. It's not about location. It's the ability to hold, because when you're going through different cycles, you need the ability to have reserves to what if I got 10 improvements, I got to carry a property and pay taxes. I'm not getting cash flow in. I have insurance I got to pay for in a rising insurance market that we're in. So these are all the things you got to get your arms around to be successful in real estate investing, especially commercial real estate investing. So the ability to hold is critical. And anything you do in commercial real estate investing, it's something that I preach. It's something. So having this conservative nature in investing is a really good thing. So to go back to your point about leverage is think about, how do I protect my downside? If the sky opened or the ground opened up and Armageddon was happening, how are you going to protect your investment? That's how you have to look at it.
It seems like we're close sometimes to that nowadays,
Well,
you know?
the problem is we're in a low interest rate market.
Yeah.
Things are trading at extremely high prices, especially if you're younger. I've heard a lot of younger brokers, they're like, yeah, this thing's just going to keep going. It doesn't keep going. We go through cycles and you're starting to see it. So if you're in the business and you're younger, you're going to go through cycles if you're going to be in this business a long period of time. And don't think like, because things are great during a period, it can't change. Values can't change. Rental rates can't. They all can change. I've seen rental rates. I have a property right now in Arizona where I've seen the rent compress $7, $8 a foot. Think that in a market like that. It's happening. And so things have changed and you have to be wary. You have to be really conservative and you have to do your homework. And over leveraging a property to me is not a great move.
Yeah, I think over not only a property, but over leveraging even your spending is just a nightmare. And in the property space, you don't even want to over leverage and build it up or add value to it. It's always best to take the conservative approach. Thank you for sharing that point, Ben. Let me ask you a question. There's a lot of real estate agents out there now, a lot of these gurus, et cetera. As a successful investor and someone that's built a promising business here, what advice do you give to an up and coming agent? And also, how do you deal with agents and their egos? Because egos in real estate, and what I'm finding just through this podcast, which I do for fun and to learn from people like you and share that, how do you deal with egos in real estate? And also, how do you have a real agent keep going, or what advice would you give?
So I have a newsletter that's now called a blog. Okay. I started, I don't know, probably 22, 23 years ago. Brokerage firms would read it when I wrote on a weekly basis to the brokerage community. I do it to investors, and now we have different segments. I do it once a month to each segment, and one of them is the brokerage. And I would do a Q&A where they could ask me a question, I'd answer it. But the biggest topic that came up in the brokerage world was, how do I get you as a principal, Ben, or someone like you to say yes on a deal? Because we're looking at hundreds of deals a week. That's all in packaging. When you can act as a principal, you got an accurate rent roll, you got a couple years of operating expenses, you give me the vacancy rate. If you can underwrite the deal, and then you can explain that in the package you give me, they give you these offering memorandums or flyers. Where I see the difference in brokers is where their packages, Simon, stand on their own. I say that when you write a letter. I say that when you create a package. If I gave you a package, or let's say you had a 6-year-old daughter and I gave her a document, she should be able to reiterate back to me what it means. So when you're listing a property and you can explain the deal and underwrite it in the area, that's how you get people to say yes. You give them the proper information and documentation to support it. That's how a lot of great brokers in commercial real estate do very well. Regarding egos, I've been wildly successful in this business, and I just don't put up with it. Basically, what I do is when we submit an offer, our staff, our acquisition staff, or let's say I'm involved, is I'll educate the broker, because I operate on a high frequency, a high level, okay, of integrity. Is I will say to the broker, here's my offer, and this is why. This is how I valued it. Now, I might see a package, or I might get a call, or my staff gets a call, and they say, well, we want $20 million for this asset. I'm like, well, how did you come to that number? Now, if the broker can't tell me, it's very challenging to get a deal done, okay? The reason why deals don't happen is, one, you'd have a motivated seller, and two, it's bad documentation, bad information. And so when brokers ask me, like, how do I get you to say yes? Give proper information, okay? And regarding egos, that's just an internal mechanism. If you're confident in yourself and you love yourself and you work on yourself and you're emotionally balanced, I don't really care. What is someone going to educate me in the business, or someone's going to run circles around me? Because I've worked on myself. I'm extremely knowledgeable in the business. I'm emotionally intelligent as well. It allows me to deal with personalities. I have people that work for me. There's different egos. There's different brokers. Just my advice to principals out there, or your other brokers, worry about yourself and how you conduct yourself. You can't control someone else from being out there. Look, if someone's going to be an ass, they're going to be an ass, right? And you can pick and choose who you want to do business with too. I always talk about the word abundance, okay? When you have abundance of investors, abundance of resources, and abundance of brokers, and you're constantly looking, and the word next keeps going. If you don't want to deal with the broker, then you have a choice.
Go to the next one.
And the thing is, there's people in the world that we deal with, and it's just transactional. I don't get personal. If you want to develop friends with someone in the business, that's great. I have a broker who sells all our deals. He's a very close friend of mine. He's one of my closest friends. He's like a little brother to me. I love him. But that's a special relationship. Pick and choose your resources. As you grow, you'll tighten your inner circle. That's just the way life works. And, at the end of the day, it's why you have to just kind of be aware. Because when environments change, for everyone out in the audience, is you might have to pivot, okay? And being aware is really important. I'll give you an example. So when we saw markets changing, we said, you know what? We're going to double down on the medical office space. We're going to pivot. We're going to provide stable cash flow. We're going to provide a different opportunity, because we couldn't predict IRRs at that point in time. Interest rates were moving, especially after 08 and 09 happened. We saw the market and we said, well, how are anyone predicting where cash flows are going to look like in the future? Well, medical office provided us more stability. So we pivoted into that market. So my advice to everyone, I get this question a lot, Simon, is what do I do when I'm younger? Work on yourself. Be emotionally intelligent. Be able to balance your emotions. Be able to be more self-aware. And also work on your communication. Because when you can read people and you can listen and be a good listener, you can decide, okay, is that a good fit for me? My radar is up. I know like this is a good deal or
Mhm.
not a good relationship for alliance, or this is going to cause strain. Add that to our employees. We continue to learn. One of the things we do is we meet with our leaders one on one every Monday, and one of the questions we give them a questionnaire, and we say, well, what strained you last week, so we can learn. And that allows it, and a lot of it is communication, the people around them. And so be very cognizant and aware of who you surround yourself, who you do business with, who are your relationships, personal and business, and that defines your life. And
Love it.
also defines where your mind's at in your space. So I'm extremely selective with who I surround myself with. And if you do that, you'll see great success and a lot of, because we all go through life and life is short. And you say, well, time's my biggest asset. Who am I spending it with? Right. And who am I responding to? I get so many DMs on social media. It's overwhelming. Works on it.
Yeah.
And so for me, it's like, if who am I going to spend time
Yeah.
with? And so
Well,
that's,
I appreciate your time spending it with me, of course, Ben.
yeah.
Ben, I had a question. On your Instagram, and that's the real Ben Reinberg.
Mhm,
You put up, stocks or real estate investing.
mhm.
What's your take on that? It briefly is real estate your go-to, or do you also play in the stock market? Given that it's recently fell 1,000 points and so forth, and it could be sporadic.
Yeah, I mean, I am a big tech investor, and a lot of it has to do with alliance as well. I
Okay.
mean, I invest in different technology companies. We have a chief people officer in our company where we use technology to understand human behavior. Uh, we're using technology for AI. And so technology to me is something that I'm putting a lot of capital into. Um, what else are we putting capital into? We put capital into other companies, buying companies as well. And so these are some of the things that I partake in
So
as
you
well,
do.
in addition to real estate. But I like assets that produce cash flow. And then I'm a big proponent of the blockchain and getting into, I do love cryptocurrency and Bitcoin and the different coins. I have my oldest son is a player in the blockchain business. And, he's here in the Los Angeles area. And so for me, I've gone on a learning curve and continue to learn about the blockchain. And I think it's fascinating. And I know it's going to be part of our future, not only Alliance, but also in the
In the
world.
world. Yeah, I agree. And it's definitely interesting. It does have its highs and lows as well. But Bitcoin seems to be the most stable one of that from what I've experienced. Let's talk about work-life balance. I mean, you've got a pretty big business going on here, multiple locations. I'm not even going to ask you if California has been your focus of investing lately, even though you're in and out, which you could share if you like. I tend to now not want to invest in California personally because I live here and seen what's happened. But maybe you could comment on that. Is California still an open investment
Yeah,
market, or are you like Grant Cardone saying screw
I,
California?
I'm not a big proponent. I agree with Grant. I am
Yeah.
not a big proponent of investing in California. I live here now, but we invest mostly in other states. I don't like the politics here.
Okay.
I don't like the certain laws and regulations here that I think hurt commercial real estate owners. There's certain rules with tenants that I don't
Hmm.
like, and I think it's challenging
Hmm.
to own real estate here. Now, I'm not saying we wouldn't look in maybe Orange County or San Diego or some other areas where, especially medical office, because,
Yeah, there's a
but,
lot of elderly there.
and it's an interesting market. I mean, there's certain areas where it's like there's no vacancy in retail around here, which is like ridiculous,
Mm.
but it's not a representation of the United States. And so I feel, and also the pricing is extremely aggressive in
Hmm.
California. And so it's hard to make money. So it's a lot of risk. It's a lot of regulation. And and the price of gas to heat these buildings, everything is through the roof
It
here.
is, and they
So,
raised it
so
recently. So,
yeah, and so someone would have to sit me down on a couch and explain to me why would we invest in California. And I'm not saying it won't happen. I'm not saying there won't be an opportunity presented to us that makes sense, but it just doesn't seem, Simon, like a great use of
logical
time
move.
when we can go into Florida or the
Hmm.
Carolinas or or we can even go into Iowa or
Hmm.
somewhere else that maybe is a little bit has better yields, a little bit more stability, and less regulation going on within that state.
Personally, why are you in California? I mean, you could pretty much live anywhere. Is it because of your
You're
son?
right. I ask myself that question every day. My kids went to USC, and so my family had family out here,
Okay.
and we were tired of being in Chicago. We went through the
Hmm.
pandemic, and my youngest, who's my daughter, was in high school during COVID and wasn't really happy with
Oh,
the online draconian
yeah.
rules.
What a tough
And
time to be in high school.
it was a really tough time. It was incredible to see her. She's actually next week going to Cornell.
Oh, wow.
She'll be
Congrats.
freshman. And what's interesting is we looked at it and we said, okay, well, I wanted to be in Texas or Florida or Tennessee, and we end up because of family coming out here. But things could change. I could definitely see having my residence in another state and
Hmm.
still owning a place out here and being out here for 4 months and being somewhere for 8 months or whatever I need to.
I meet so many people from Chicago that moved to Florida and they're so happy.
Yeah,
Just,
it's a great. Florida's great. It's well run state. I traveled there a lot during the pandemic. My staff wanted me to get tested before I would come back. I would get tested. I would walk into a CVS or Walgreens to get tested, and then get on the plane and walk in the office, and they would feel comfortable that I didn't have COVID. And so Florida's been really good to me in my career, and I've been very blessed to do business and have a lot of success. And we've seen a lot of growth there. It's tremendous. It's crazy. People used to criticize me for investing in areas where you can have a hurricane, whether it's New Orleans to Florida.
Mhm.
But we invest there, and we have great people and staff, and I've been very fortunate in those markets.
I love those markets as well. And I double down on what you said to your point. Investing in California, whether you're starting a business or anything, is just a challenging thing, especially including in like the San Francisco area with tenancy laws, including rent controls and AB 1482s and everything that they've released nowadays. It's just you're up against the hill to sell, leverage your property, et cetera.
Well, and add to this,
Yeah.
the insurance companies have pulled out of California.
They did a lot.
So
You're
now,
right.
so now it's challenging to get properties insured, and you don't have a lot of options. And guess what? Your costs rise.
Absolutely. And it happened overnight.
Sit me down and say, this is why you should be buying commercial real estate in California. I'm not saying there's certain areas that you couldn't do really well in, but it's challenging. And a general office is going to be challenging everywhere.
But you're also paying for those areas a very premium price for the
Yes.
buildings, whether you're in Silicon Valley, which is where we are nearby.
Yep. Yep.
USC is a great school. I almost went to the Marshall School of Business, but I didn't.
My kids have gone.
I didn't go to college. Do you think college for the young audience is worth it anymore? Is it complete?
Don't say it's my kids, because I don't think you need to go to college. But I understand people do it for social reasons, build a network. Like when my daughter goes to Cornell, Simon, and she graduates in 4 years, and she's in the business school, but the hospitality program, which is #1 in the world. She's going to have resources to be in that industry in abundance. So that's going to be a benefit to her, and she's going to learn the business side and everything. So that I understand is a good use. But if you're an entrepreneur, okay, you don't need to go to college. What you need to do is work on yourself, work on your communication. You're going to have to be persistent. You're going to have to work hard. You're going to have to network. You're going to have to get out of your comfort zone, all these things that sometimes people don't want to do. But I have friends and colleagues, like, put it this way. If I didn't go to Indiana University and graduate from accounting, I'm also a CPA, would that have changed the trajectory of my life? Maybe, probably not. Maybe not. The CPA background helped. I'm not kidding. It helped. Good resources. Going to Indiana, it was a great business school when I was younger. It was top 5. But at the end of the day, to get to this point, it wasn't about that education. It was about educating myself and controlling my mind and be able to push forward and get through tough times and network and build resources and continue to improve my health and just really focus and be persistent. And so for everyone out there that didn't go to college or or whatever it is, you can be wildly successful without going to college. You could do anything you can out there, but again, it's going to be on you. It's going to be on you to wake up and show up. It's going to be on you to focus and be determined. I still go to the office every day. I'm sitting in our West Coast office right now. Okay. And you have to be hungry. I did a post on social media. I said, are you hungry? I came in the office on Saturday. I go in the office on Saturday, not as much anymore, but I do still. So I was working 7 days a week. I was raising money 7 days a week. I was going to do what it was possible to become dominant in the space that I'm in. And so I ask everyone out there is how bad do you want it? Because how bad you want it is going to determine where you go in your future. So to get back to what you said, no, you don't have to. But if you want it bad enough and you're focused and you're willing to work on yourself and continue to grow and learn, you could do anything.
I love that. Thank you for sharing that, Ben. And as we wrap up this podcast, a couple more questions.
Sure.
For those that have children, you obviously have is it 2 or 3 kids you have?
We have 3.
3. Wonderful. With parents out there, how do you instill that hunger? Because obviously you had a vision. This didn't happen by accident. And it happened through hard work. It happened through struggles, blood, sweat, tears, you name it. How do you instill that vision in your son and your daughter to drive their hunger? Because nowadays, from what I'm seeing is people expect it faster. Something breaks, they don't want to fix it. They want to replace. They rely on someone else to fix it, that type of thing.
Yep.
So how do you instill that?
Great question, Simon. I love it. One thing I did with my kids is I led by example. They saw me working hard. They saw the traveling. They saw the grinding. They saw what I needed to do to provide a great lifestyle for them. So one was my actions over words was really important. The other thing is I taught them the value of money. I taught them what it means to earn money. I taught them what it means to budget money, how to save. And so I led by examples. And so what I did was when my kids got into high school, I put them on a budget. And so my oldest son, I'll give you an example. Back in the day, he's 24 years old right now, soon to be 25. I might say to him, okay, I'm going to give you $100 a month and it's going to, for gas, maybe food, going out with your friends, etc. Whatever was at that time going on. And he said, great. So I put the money in his account at the beginning of the month. And what would be great is I would say to him, I'd look at, day 26 of a 30-day calendar month. I'd say, well, how's it going? Now, knowing that out of the $100, maybe he had $4 left to get through the remaining 4 or 5 days left in a month. And so those were lessons that they had to learn of how to value money and deal with it. And so I've always made my kids earn things. They've had to work and teach them the value of money. I can't even fathom or understand the entitlement issue. I'm like Teflon when entitlement word just bounces off me because I'm a guy who had to earn everything, continues to earn everything. And my kids are the same way. Okay. They have a great lifestyle. We established a great environment for them. They've gone to great schools, been well educated, but they've had to earn everything. My kids are all honor roll, excel, great test scores. And that's because we instilled in them of you got to work hard, you got to be persistent, you can't take things for granted, you got to focus, you got to work on yourself. All these things culminate in business and life. For everyone out there is, if you're a parent, lead by example. Let them see how hard you work. Have an open conversation about money. No one wants to talk about money. So being a finance expert, which is what I really am, is I'm positioned to talk about money. Where do I invest it? How do I save it? What do I not buy?
That's a big one. What do you not buy? That's such a big one.
I like nice things, but I also know that I like making money. So I don't need 10 cars. I don't need it. It's a hassle for me managing. I got more assets I need. I don't need to manage more. I teach how to delegate. I teach how to treat people and communicate. And so my kids have seen this and they've implemented it. And that's why they'll be way more wildly successful than me because they had me to mentor them, to get them to this point. And so your actions that you do for your kids, you know, like people always ask me when they have babies or their kids are young, I say, read to your kids. Reading to them is huge when they're young. And so for me, it's the same thing as they continue to progress in life is continue to educate them. Just like you want to be educated, whether you're in commercial real estate or any other industry.
Love that. I was going to ask how you delegate your time and family time, but you've kind of covered it, giving them attention, being there and showing them by leadership, lead by example. I think through this podcast, communication has been a big word, teaching them how to communicate, how to receive advice and everyone for that matter. Also, over leveraging stood out to me, and I hope the audience understands that it's very easy to over leverage in a credit card world. But as you mentioned, the interest rates go up. Over leveraging could kill you. One final question, Ben, and it's been a great podcast. I do want to thank you for your time. I mean, you very, very knowledgeable, very straightforward, and I appreciate it. I know the audience will. If you could go back in time, maybe to the Ben that was 20 years old that started his real estate career, or maybe even earlier, what piece of advice would you give yourself, and what point in time would that be at?
I would have said when I was younger to work on yourself, work on yourself, really focus on health, focus on wellness, focus on balancing your emotions. I would say probably that time would have been start in my mid 20s, you know, when really things were starting to grow and I was learning and starting to have kids when I was in my late 20s. These things would have helped. And I just didn't know. But now I know, and people know out there, it's like if you're young and you're getting started in life and business or relationships, working on yourself will help you in all realms, and you'll have better relationships and deep-rooted relationships. And so that's something I had to learn.
I love that. I love that, working on yourself. And now that you're older, how important is health and working out to you to maintain that positive mindset?
Oh, it's everything, Simon. I work out 5 days a week with my trainer here. I eat healthy. I take good care of my body. I take really good care of my mind. I meditate twice a day. I am really into health and wellness. I don't drink anymore. Now, I collect wine, and once in a while I have a glass, once in a while. But generally speaking, I don't drink alcohol. So I am very cognizant of my mind and my body and my health. And because I want to show up as the best version of myself for the people I interact with on a daily basis.
Ben Reinberg, thank you so much for coming on. We'll link all of your info below. Guys, you had it here. One of the best in real estate, giving his advice, golden nuggets. Hopefully you enjoy it. Reach out to him on Instagram. If you're an investor, check out Alliance. It sounds like they will take care of you, and they know what they're doing. So appreciate it, Ben. Thank you for coming on the Ideal Hour. Truly a great hour. I learned a lot personally. I know the audience has as well.
My pleasure. Thanks for having me.